This is Oliver Slope from the floor of the CME here in Chicago with your grain market update. We are seeing the grains get a nice bid in the market. A lot of that over new news in the overnight session that U.S. and China would resume trade talks, and that has put a big pop specifically in the soybean market. We're seeing soybeans test that psychologically significant $9 handle. If we're able to get a conviction close out above here to wrap up the week, I think that opens the door for additional short covering from the funds, and the next line in the sand really doesn't come in till about 9:15 to 9:23. Now, if we fail to break out above here, potentially some sellers step back into the market and try to press us down. Support 881 to 885. Now, trade talks is going to be a big headline over the next coming weeks as China comes back to the table. It leaves the door open for them to possibly walk away again. I was joking with somebody else. This is kind of like my old high school dating relationships where you're talking one week and not the next. These headlines are going to put volatility into the market, which should present some great opportunities for traders who are nimble in these futures markets, as you should be. Now, as far as the corn's concerned, right up here against technical resistance, we've got 380.5 as a big level. This is a retracement from the May highs to the July lows, as well as the original breakdown point from Friday's USDA report. If the bulls are not able to achieve consecutive closes out above here, I think the bears remain in control, and a break and close back below 375, which is the 50-day moving average, opens the door for new momentum traders to step in and sell this market. Now, wrapping things up with the wheat market, wheat also catching a nice bid on the back of spillover momentum from corn and beans, but we also had great export sales out here earlier this morning. However, we remain a little bit more pessimistic on the wheat market. We're moving out to December. That's where a lot of the volume is going to be for that Chicago contract. 539 to 540.5 is going to be a big pocket on a closing basis as we wrap up the week. This represents the 50 and 100-day moving average, as well as a 50% retracement from the August highs to the December lows. Now, if we do break down below that, I think it opens the door for some long liquidation from the funds who have been establishing a net long position. The next line in the sand we're looking at comes in 521, 523. This represents a 200-day moving average, as well as a key retracement. I think the headlines of hot and dry and potential crop loss overseas is overdone, and it's run its course, so we remain bearish. The wheat market, hopefully get a technical breakdown to confirm that. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.